The government shutdown is over, which is great news. But we can't pretend it's all great news for those that rely on marketplace plans for their health insurance. After all, a large reason for the government shutdown was disagreements in Congress over the extension of those expanded premium tax credits, which were made available under the Inflation Reduction Act and American Rescue Plan Act. So now that the government shutdown is over, it's looking completely unlikely that those premium tax credits are going to be further expanded for 2026. So what does this mean for you? Well, in today's video, let's talk about those premium tax credits, how you can maximize them, and other alternative options if a marketplace plan just is no longer affordable for you and your family this year. Stay tuned. So first and foremost, let me clear up some confusion. First, premium tax credits are still available. However, those enhanced premium tax credits, which were made available under the Inflation Reduction Act and American Rescue Plan Act, will expire at the end of 2025, which means they're not going to be renewed, or at least it's very unlikely they're going to be renewed for 2026. However, the basic premium tax credits will still be available. Without this extension, people with moderate incomes will see premium increases, the subsidy cliff will return, older adults may face steepest increases, families who are over the income eligibility limit may lose premium tax credits entirely, and bronze and silver plan pricing dynamics will shift significantly. Open enrollment is already underway, so you've already seen what those increases will be for 2026. And it is expected, and we've seen it happen, that some people are seeing premium increases of up to 75%. So what can you do about it? Well, first and foremost, let's talk about those bronze plans. Under the One Big Beautiful Bill Act, bronze plans are now eligible for HSAs, which is a great way to save money, believe it or not. So HSAs offer what's known as the triple tax advantage. The amount that you contribute is pre-tax, more on that in just a moment. Also, the accounts themselves are interest-bearing, and that interest is not taxed. And you can even invest a certain portion of your HSA, and the earnings on those investments are not taxed. But let's get back to that first component where I said the amount you contribute is pre-tax. So in order to determine your eligibility for a premium tax credit or premium subsidy, the marketplace is looking at your MAGI, which is Modified Adjusted Gross Income. If you can lower your Modified Adjusted Gross Income, then you may be eligible for a much larger premium tax credit. Contributing to an HSA is a great way to lower your MAGI. So in 2026, the maximum contribution for an individual to an HSA is $4,400, and for a family, it is $8,750. And of course, for older individuals, there's an additional catch-up contribution of $1,000. That means depending upon your age and the type of plan that you have, you may be able to lower your MAGI by $10,000. That could push you over the threshold to make you eligible for much, much larger premium tax credits, which could save you thousands of dollars per year in premiums. So we highly encourage you, this year especially, to take a strong look at those bronze plans if you are someone who is in need of a premium tax credit and may be ineligible due to your income. A brief pause here to remind you to please like this video and subscribe to stay up to date. There have been constant changes in the world of healthcare, and we want to make sure that you are up to date on all the information. Of course, if you have questions or concerns, you can reach us in the comments below or at the number on the screen. We're licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. So please feel free to reach out if you need any assistance. All right, let's get back to it. Now, the truth of the matter is, even with looking into an HSA and a bronze plan, marketplace plans may just be too expensive for you this year. And that is something that we've heard a lot of. And there are alternatives that you could look into as well. First, I want to talk about short-term medical plans. So short-term medical plans are a type of private insurance, and they also have gone back and forth in recent years. So as it currently stands, in most states, you can enroll in a short-term medical plan for a period of up to 3 years, which is really not so short-term. Now, short-term medical plans, unlike marketplace plans, do require medical underwriting. So that means if you are someone who is in poorer health, perhaps with multiple pre-existing conditions, it is possible that you could pay a higher monthly premium. You could be denied, and at the very least, those pre-existing conditions, at least the basic ones, won't be covered in the first year of a multi-year plan. However, for healthier individuals or younger individuals, because there is medical underwriting at play, you could see a plan with very, very low monthly premiums, especially when compared to a marketplace plan without premium tax credits. Additionally, short-term medical plans will allow you to sort of pick and choose your benefits based on your needs, and you can have access to nationwide PPO coverage. However, short-term plans are not ideal for everyone. Number one, they're not available in all states. They're not going to be the best for you if you have multiple or serious pre-existing conditions, because as I said, you could see higher monthly premiums or you could be denied. Additionally, short-term medical plans won't cover everything. For example, they're not going to cover pregnancy. So if you are pregnant or looking to start a family, this is probably not the best option for you. However, as I said, if you are someone with less serious medical concerns, then a short-term medical plan could be a great way to save money, especially in this current healthcare climate. You could also scale back and look into a more bare bones plan if that's something that would work for you. For example, there are catastrophic coverage plans. These are high deductible health plans that are really just there to protect you should the worst happen. Now, these types of plans are available on and off the marketplace. However, if you choose a plan on the marketplace, you'll have access to covered preventative care even prior to meeting your deductible. Usually it's like 3 visits before you have to worry about meeting your deductible. So you will have access to some type of quality care regardless of whether or not you've met that very, very high deductible. Usually these are reserved for younger people, although there can be exceptions based on your income. So this is something you could look into as well. Now, we'd highly encourage you to look into a catastrophic coverage plan if you are enrolled in something called direct primary care. This is not insurance. It's basically an agreement between you and your doctor. Not all doctors offer this, but if this is something that is offered by your physician, then this could be something you could look into this year. Basically, it's some type of contract between you and your doctor, which will outline the monthly fee that you will pay, not a premium because it's not health insurance, to have regular access to your doctor for whatever your more basic concerns are. These can be a great way to have access to quality care with your regular physician. However, it's not going to afford you coverage if you need to be hospitalized. So if you are able to engage in some type of direct primary care agreement, then you still need to have some type of catastrophic coverage plan in place, or perhaps an additional lump sum payout plan, more on that in just a moment, to cover you if you have more serious medical needs. Now let's switch gears and talk about those lump sum payout plans. Specifically, I want to talk about critical illness plans and hospital indemnity plans. These lump sum payout plans basically work in the same way, but under different circumstances. So for a critical illness plan, you would enroll in this type of plan. You'd have to undergo some type of medical underwriting. And then should you be diagnosed with one of several specific critical illnesses, then you would receive a lump sum payout. This could be used for whatever you need. You could use it to pay your health insurance bills, but you could also use it for your mortgage or groceries if that's what you need it for. Hospital indemnity plans work in similar fashions, except the circumstances are basically that you have to be hospitalized. And the specific terms will be detailed in your specific plan, whether critical illness or hospital indemnity, but this is another type of supplemental protection that you could have in place, especially if those marketplace plans are just too expensive this year to afford you the regular coverage that you might ordinarily enroll in. Now, one thing I want to caution you against: please do not enroll in a health sharing ministry or healthcare ministry. It can be especially attractive right now considering how high those marketplace plan premiums have become, but these are not regulated in any fashion. And as much as you may have heard horror stories about insurance and the difficulties there, the horror stories regarding health sharing ministries are even more so because, as I said, they are not regulated. There can be specific circumstances under which they'll just flat out deny your claim for no reason. You have to pay upfront and then wait to be reimbursed, which can be, quite frankly, financially impossible. Additionally, there's no real regulation with regards to how much of the amount that you contribute will be used towards reimbursing medical bills versus something like marketing. We've got a video that goes more into detail, which I will put over here if you want to learn more. If you want to learn more about marketplace plans in general, I highly recommend you check out this playlist over here. Of course, if you have questions or concerns, you can reach us in the comments below or at the number on the screen. As I mentioned, we're licensed health insurance brokers, we're licensed nationwide, and there's absolutely no charge for our services. And before you go, don't forget to like and subscribe. We'll see you next time.